Chang's CEO, Damola Adammalinken. Damola, thanks for being on with us. Where the Fed and markets are concerned, they strip out things like energy prices and food prices, yet when you look at even the most recent CPI, the November CPI, food prices continue to rise. What are you seeing in your stores?
Yeah, that's right. And, a lot of that is driven by grocery in addition to restaurants. So you see on both sides, there's a lot of pressure in certain segments within grocery, like eggs have been particularly painful for consumers. But, as the Fed kind of thinks about inflation, they break it down to goods and commodities, and they look at housing, and they feel good about both of those categories. It's the services piece that's really driven by wages that presents the biggest problem. So we're watching the wage rates closely. We're seeing how they're trending. There is some positive trends in the last few months, but overall still at very elevated levels.
So are you able to hire enough workers in your restaurants?
We are. There's more availability for jobs than there are people seeking jobs in the economy broadly, and we see it in our business as well. That's starting to stabilize a little bit. It's starting to get back towards parity. You see, a lower number of severances in the last month or two, a lower turnover rate, higher retention, all of which are precursors to being able to fill the jobs that we need to fill and being able to manage wage rates, in the next few quarters.
So, yeah, we've talked to you about that in the past, Damola. So, how different is it than it has been? And is it your expectation it's only going to improve as this year moves along?
If you'd asked me 3 months ago, I'd have said it'd have been no different, right? Our peak kind of difficulty in filling positions would have been middle of this year. I'd say Q2. And month over month, over the last 3 months, I'd say it started to improve. And again, I'm not talking about wage rate necessarily. That started to marginally decline, but what you're really seeing sharp reductions is in things like separations, quits, turnover rate rather, and that should lead to a more kind of stable labor environment if people are quitting less and leaving their jobs at lower rates and staying with the same company longer. That's going to put less pressure on wage rates, which I do think we'll see in the next few months.
I wonder how you're processing, what appears to be huge disparity in food inflation. We've seen downdrafts in things like chicken and coffee, but everybody talks about what eggs have done because of avian flu and so forth. What's the overall trend right now?
Well, you nailed it. It's category specific, right? The overall trend is declining in terms of inflation rate. The peak, again, was in 2Q of last year, 2022, where you saw, the massive increases in chicken. Some categories went from $1 a pound to $3.50 at peak in June. That's come back down to close to $1. Flank has come back down. So most categories, oil, driven by the broader, energy picture. So most categories are under control. There's a couple of categories that are spiking. Some have unique issues in their supply chain markets. You look at eggs, for example. There's an avian flu, epidemic that's wiped out 40 million birds in the supply chain. So that's driving prices up in eggs. Rice is another category where prices are going up. So we manage category by category, but overall, commodity prices are coming down. Goods prices are coming down. Building commodity prices are coming down. And the biggest issue, again, is wages, which you're starting to see kind of preliminary signs that might start coming down in the next few months as well.